Hello, this is Victor Santana with Stock Hunter's weekly video for June 27th. How's everybody doing? Hope things are going well. So let's go ahead and take a look at the markets and see what's going on. Okay, what we're looking at here is the U.S. total markets here, TMW. We're looking at a daily chart here going as far back as 3 months. We're looking at the 200-day line, 100-day line, 50, and the 18-day moving average line. So by looking at this here, you can see that all these lines are starting to converge together here. The 50-day especially coming down, which is usually the intermediate trend here, while the 200, so everything's starting to bunch up right over here. This is going to be a very critical point that's coming in. So we're under the 18-day moving average, and we are still showing that we are going down with these red bars here. So we may go as far down as down here before we get a bounce, or we could get a bounce up in this area here. But right now, based on the Friday's actions compared to Thursday, look like we are due for a little bounce here. How far up can we go would be hard to tell, so we'll just let the market tell us which way it's going to be going. So but overall the market's still kind of on a downtrend over here, overtone. So let's go ahead and break this down to individual indices real quick. I'm going to start with the Dow, and you can see here with the Dow, the 50-day moving average here is already pointing pretty much at a steep angle here, crossing over the 100, and they're all getting ready to converge over here. We are under the 18-day moving average here. Based on this formation here, if we could break above the 18, we can probably see 103, maybe 104 max. We are still on a downward momentum here. As far as these bars, you could see that they're getting a little bit smaller, so the selling pressure is becoming less now here, so we may be getting a bounce, go up to 103.50 area next week. Okay, so now let's go in the S&P. S&P also, you can see the 50 days moving down. We are further down below the 18-day moving average. Here we have almost like a little spinning top formation. So it's indecision. We could either continue on down further or try to get a bounce up in this area here, maybe as high as 111 if we do get the momentum in the crossover here, on the crossover as we've been following. Now let's go to the Nasdaq. Nasdaq here, the 50-day moving average is not quite as steep, and we are starting to merge. We are over the 200-day moving average, which is good. Looks like we may get a bounce here because there's been some buying pressure up here, brought us back up to 200. So we could probably go up to 45.88 all the way up to 46 for this coming week here. As you can see, the momentum still headed down, but the bars are still in the red zone here, negative. So we normally like to see this turn positive, a positive tick. So still very nervous. Now let's go into the Russell's 2000, the small caps where the risky money people come in, and this one did get a pretty good green arrow here. We are still below, and the red bars here, but they're getting less. So this may want to get a bounce probably and get up to the 66 area here, 66.85. So this has a little more positive outlook, but we're still under the 50. And then finally, let's look at the global. And the global here, I want to point out, if you want to see what a bear market looks like for global, this is it right here. where everything got crossed over. Now you have the 200 above, the 100, and the 50, and the 18 here. So that is pretty bearish down here. So this seems to be leading the way for everybody. We are under the zero mark here, negative, with the red bars down over here. We did get this star formation here, so we may get a bounce, maybe up to the 53.78. If anything, we may head up to 55.86, make a double top up here. So basically, in short, the whole market is seeming pretty gloomy. We may get the bounce, but it may be just a short-term bounce where everybody's going to come in and then sell. So that's pretty much it. Until next time, let's keep our eyes on the markets and be on the right side of the market.